Skyrocketing stocks, founders becoming billionaires literally overnight, and a revolutionary technology that promises to change, well, everything. It all sounds a little familiar, doesn't it? The parallels between today's AI gold rush and the dot-com bubble of the late 90s are pretty hard to ignore. So the big question is all this excitement just setting us up for another spectacular crash? All right, let's get into it.
Yeah, this is the question on every investor's mind, every founder's mind, really. Are we just watching a rerun of an old movie? Are we just doomed to make the same mistakes all over again, or is something fundamentally different this time around? To figure that out, we can't just look at today's headlines. We need a map. We need to zoom out.
And you know what? It turns out there is a map. For more than 250 years, these huge technological shifts have followed a surprisingly predictable pattern. And if we can understand this historical cycle, we can get a much clearer picture of where we actually are with AI today, and maybe even more important, where we might be headed next.
So, what does this map look like? Well, this timeline is based on the work of an economist named Carlota Perez. She identified these 5 massive technological revolutions, from the very first factories all the way to the dawn of the internet. And each one created this huge surge of investment, of disruption, and eventually a total transformation of society. The big takeaway here is that these periods of intense, almost chaotic change, they aren't the exception, they're the rule.
Every single one of these revolutions kicks off with what Perez calls the installation phase. Now, this is the part that feels like a gold rush. It's fueled by financial capital, VCs, the stock market, everyone's betting on the future. It's a time of building out the basic infrastructure, like the railways back in the day or fiber optic cables more recently. And it's almost always accompanied by wild speculation and, you guessed it, a financial bubble. So here's the crucial point. That bubble isn't the whole story. The chaotic installation phase, it eventually hits a turning point. Now, this is often a market crash that just washes out all the hype. But after that, we get into what's called the deployment phase. This is the golden age, where the technology really becomes widespread, gets woven into the fabric of the economy, and it's fueled by real profits from production, not just by speculation. Okay, so with that framework in our back pocket, let's look at the most recent and probably the most memorable example for a lot of us, the dot-com era. It was a perfect textbook installation phase. It was filled with incredible promise, massive investment, and ultimately a really painful collapse. And this number right here, wow, it just perfectly captures the mania of the time. At its absolute peak, the tech-heavy NASDAQ 100 was trading at around 60 times its expected future earnings. Now, to give you some perspective, a normal historical average is closer to 15 or 20. So investors were paying prices that were just completely unhinged from the reality of these businesses.
This quote from investing pioneer Rob Arnott just nails it. The core idea that the internet was going to change the world, that part was 100% right. The mistake was all in the timing. The market's irrational exuberance, as they called it, priced in decades of future growth as if it was all going to happen tomorrow.
So let's just break down what made that bubble so fragile. First, business models were based on getting eyeballs or clicks, right? Profitability was kind of an afterthought. In fact, only about 14% of these dot-coms were actually making any money. Then you had these weird, unique things like the Y2K scare, which pulled years of IT spending forward into a short period. And then you had outright fraud like at WorldCom, creating this false sense of demand. The whole thing was just a house of cards, and it came crashing down hard. Okay, so that brings us to today. The excitement around AI, it feels incredibly familiar, right? We're seeing that same massive flood of capital, that same widespread disruption. So the question is, are we just living through the early days of a new installation phase, one that comes with its own speculative bubble? If you want to know where the excitement is, just follow the money. Look at this. In the first quarter of 2025, a staggering 58% of all global venture capital funding was poured into AI startups. When one single sector is sucking up more than half of all the risk capital on the planet, that is a classic sign of speculative fervor. The FOMO is real. But here's where things get kind of interesting and maybe a little different this time. A lot of people inside the industry are openly being cautious. When the CEO of a major AI player like Databricks, in the middle of a massive funding round, by the way, calls it the peak AI bubble, that tells you that even the people playing the game are aware of how frothy things are getting. Okay, so we've got the historical pattern. We've seen the warning signs. But how do the numbers, the actual data, how do they stack up? Let's do a direct, data-driven comparison and see where this AI boom is a mirror image of the dot-com bubble and where it might be something totally new. This chart right here, this might be the single most important piece of data in this whole explainer. Remember that insane 60x forward PE ratio for the NASDAQ back in 2000? Well, in late 2023, that same valuation metric was sitting around 26x. Now, yeah, that's still high compared to history, but it's less than half the level of pure insanity we saw at the peak of the dot-com bubble.
And right here, this is the absolute crucial difference. The dot-com bubble was built on promises. It was built on stories. The AI boom, on the other hand, while it's definitely speculative, is anchored by some of the most profitable companies the world has ever seen. The giants driving this wave, Nvidia, Microsoft, Google, they are not burning cash for eyeballs. They're generating enormous real-world profits and have these rock-solid balance sheets.
This table really just lays it all out. Profitability of the leaders, massively higher today. Corporate adoption, way more advanced. About 78% of firms are already using AI, compared to only half being online back in 2000. And the funding is coming from corporate profits, not just shaky IPOs. But pay attention to that last row, market concentration. At 35%, it's actually more extreme today. That means the fate of the entire market is tied to just a handful of companies. And that's a new and very real risk.
Now, that's not to say there isn't crazy speculation happening. Oh, there is. And this number just perfectly highlights those pockets of extreme froth. In the private startup market, some companies are reportedly being valued at over $1 billion per employee. That is a metric that would have been absolutely unimaginable even in the dot-com era. And it just goes to show how much capital is chasing a very, very small number of perceived winners.
So if we accept that we're in a new installation phase, what does our historical map tell us is coming up next on the horizon? This is really where that framework becomes a powerful tool for looking ahead. If we go back to our map and put a little pin on it, this is where we are. The data suggests we're deep into the installation phase. We've got the infrastructure being built, we've got the financial speculation. And, according to that historical pattern, what always follows the installation phase is the turning point.
Now that turning point, it sounds kind of scary, right? A market correction, maybe even a crisis, but it actually serves a really crucial purpose. It's the moment of reckoning. It separates the hype from the real sustainable innovation. It washes out the companies that have no real business model and lets the durable ones rise to the top and lead us into that golden age of deployment.
So when you take a step back, maybe we've been asking the wrong question this whole time. Maybe it's not a simple yes or no, are we in a bubble? The historical pattern tells us that bubbles are a natural, if sometimes painful, part of every single major technological revolution. So the real question becomes, knowing we're in this turbulent speculative phase, how do we, as investors, as builders, as a society, how do we navigate the turning point that's likely coming to make sure we unlock the incredible promise that AI actually holds for all of our futures?